Hey guys, it's Bruce Stinger with brucestinger.com. Hope everybody's doing well. They're in the land of investing and trading. Today, I wanted to go over something that a lot of traders overlook when they're trading options. And that is they'll look at the direction, which is cool, but you also want to take a look at implied volatility. So I want to share something with you guys. I'm going to share my chart right now. And just to kind of give you an idea of what it is, if you're going to be trading options, especially if you're going to go directional, what you should be taking a look at. So here I'm using as an example, and again, all trades are for educational purposes only. You make your own decisions. There is no recommendations or suggestions here. But I'm going to use this as an educational example. When we take a look at Square, ticker symbol is SQ. If we look at this over time, so it's Square was, and this was actually brought up by one of my students, and I told them, I said, you know, it's still headed in a downtrend. Now, if we take a look at this, now let me zoom out a little bit more on this, and you can kind of see some things here. This area, actually, let me zoom in a little bit. This area right here, you see this area back on the end of March, early April, this area right there. This was a heavy area, what we call a KPP, a heavy area of resistance that later turned into support. And that was about the 228.82 area. Well, right now we have Square trading at 230. It came down and touched this area, and you can see here, came down and touched this area and starts to move back up. So that has my interest. It's caught my interest. So this would be a trade-off of a KPP of 228. If it breaks below that, I'm wrong on the trade. However, take a look at this as well. In addition to that, let me stop my share here. So, and we can take a look at the options. So traders can go ahead and make money one of two ways. You can get the actual trade correct. You can get the direction correct, or you can get the actual implied volatility correct. So when you're trading options, if you're buying them, you want to get it below the 30th percentile, the 30th percentile. So when you take a look at the number here and I'm going out probably 60 days, that's the option I'm taking a look at. If we look at this area, the implied volatility shows on Square 49.27, 49.27. Now that doesn't mean anything to me until I understand where it's been over the last 52 weeks. So if we take a look at this, where it's been in the past, the low was 49.27. The high was 75.98. Well, it doesn't take a math genius to go ahead and figure out that we're in the zero percentile. So we only have ways to go up, not down. So when we take as it relates to implied volatility. So even if the direction goes ahead, if the direction goes ahead and goes against us, it makes it hard for you to lose a lot of money on a stock, because I've had trades go against me in terms of direction, but I've got it at the implied volatility, the lowest implied volatility level, and it starts to move up. The implied volatility starts to move up. The market maker starts to put juice into that option. And now, even though the direction is wrong, implied volatility increases and the premiums on the option increase. Now, if you can get the direction correct and you can go ahead and get the implied volatility correct, man, that's a recipe for success. So hopefully you enjoyed this, but keep in mind, when you're looking at options, you're looking at going directional trades, make sure you do not overlook the implied volatility. This is Bruce Stinger with brucestinger.com saying, may all your trades be green. Take care and peace out.